Hey, hi everyone. We will wait for another 4 to 5 minutes. We'll wait for others to join and then we'll quickly get started. Hi, Ankit.
Hi Amit, hi everyone, good evening. So, hi everyone, good evening. Thank you for joining before time. I think we'll wait for another couple of minutes for people to join and then we should get started.
Hello. Hey, Amit.
Hi, how are you?
All good. How are you?
Doing fine, thank you.
Hey, hi, Pushkar. How are you doing?
All good, Amit. How are you?
I'm fine, and we still have 1 minute, and let's wait for another 2 minutes if you
Right.
allow, and for the participants to join.
Okay.
Thank you so much. Very lovely to see you here.
My pleasure. No worries. So, is it possible to share the screen?
I will allow you at this moment. Yes, it is possible. But please allow me for 2 minutes to speak, to set the context, and we can get
Right.
started.
And maybe you can just share the deck. That's also fine. The one I sent you.
Perfect. No issues. No worries.
Before that, I very much like the frequent LinkedIn posts that he's sharing, and about the startups and funding and what's going on. So I'm following those LinkedIn posts. Those are awesome. Just please keep sharing them.
Yeah. Thanks, Amit. I'm glad you like it.
Thank you.
Hi
Pushkar,
Pushkar,
before even
Ankit
I
here.
could. Hi, Ankit. Go ahead.
Hey, Ankit. How are you?
All good, all good. Thank you for joining. Thank you for accepting this request to come and do a session.
My pleasure. No worries.
I'm sure everyone is looking forward to gain more insights.
We
Yeah.
just saw one glimpse, Ankit, before even I could speak, and then I spoke to Pushkar about the same, and
Correct.
we can gauge the excitement level. But yeah,
Correct.
let's make this more insightful, and we are here to learn, Pushkar.
So maybe a couple of more minutes and then we should get started.
Perfect. So just to set some context, I've just prepared a very small presentation. It will have 6-7 slides. So I would really prefer if you ask questions rather than just me talking, because then it's more fun. Not this one, Amit. Yeah. If we can just make it big, zoom. I don't know how it works.
I will. But before even that, let me start with this.
Okay.
Can I?
Yeah, if you want.
Yes. Only thing is there's a slight difference between, in the photos that we see.
Yeah, it's a 5-year-old photo.
I would request other participants, in case your colleagues and they're joining, just ask them to join another 1 minute, and we can quickly get started.
Shiva, can you make Pushkar co-host so that he can also, and then spotlight him when the session starts?
So Pushkar is a co-host right now, Ankit.
Done. Yeah.
Ankit, we should get started.
Let's do that. Over to you. Amit.
Okay. Thank you so much. Good evening, all of you. Thank you so much for making yourself available here. We are very excited. I can gauge the momentum and excitement level at this point in time. Thank you so much, Pushkar, Ankit, both of you for joining. Uh, my name is Amit Singh, for those who do not know, and uh, I will be your host for today's masterclass session. I'll be posing some questions on behalf of you, and you can also unmute yourself and post questions. But before that, let me talk about the expert Pushkar Singh, who is going to speak on raising capital for early stage startup. And like one gentleman mentioned about his amazing posts, which I wanted to actually take a little later, right. Pushkar has been very clear and crisp when it comes to talking about funding strategies, when it is talking about valuation, all those. You can actually click his LinkedIn profile, you can see. But let me talk briefly about what Pushkar, and Pushkar can then talk further. So he co-founded Tremis Capital, which is an Indian deal advisory firm, in 2018, after working for many years in finance and consulting. And at this firm, he helps early stage startups raise venture capital and co-invests in seed and pre-seed rounds with other institutional investors. He studied his Master of Science in Economics at NHH Norway. He's an MBA in Finance from IIM Indore, India, and obviously started as an engineer right from Manipal University. Am I audible?
Yes, Amit, you are.
Thank you so much. And he has had an amazing career, and I'm really grateful to Pushkar, because the kind of posts that he writes actually are definitely going to help all of you, right? Pushkar started his career in 2008 with Knight Frank, which is a UK-based property consulting firm, and then worked in infrastructure finance at Kotak Mahindra, which is, all of you know, one of India's largest financial conglomerates. Without further ado, the stage is all yours, Pushkar. We welcome you. Take care.
Thanks, Amit. So,
Do you want me to share your slide?
Yeah, I think that would be nice if you can do
Okay,
that.
I will take then another seconds and I'll just do that. Yeah, I was already sharing my screen. So here is the profile also. Meanwhile, all of you after the session can actually go through, and let me just open the, yes. So let me start from the beginning. Do let me know if you all can see it in the full screen mode or this is fine.
Better.
This
Is
is
it
better.
fine?
Okay. Pushkar, over to you.
Perfect. Thanks, guys. My pleasure being here. It's a very small presentation. It's not boring. So it just gives an overview. Please ask questions. So whenever we talk about early stage startups, now that's a very confusing term. So what exactly is early stage? So how most people define early stages, either you are a free product, that means say you have a great idea, you want to build something. You want to build a tech product, a non-tech product, and you want to raise capital for that. So mostly it's salaries, could be some tech infra. So what we also call pre-seed capital. You just need money to raise some, to build the product, to bring your idea to life. Then once you have built the product or an MVP, typically you don't build the entire product at one go. You try to build a minimum viable product, which is good enough to start with, and you launch it. So the second stage could be like you have launched the product, but you're not making any revenue. You're just trying to acquire clients. And then finally, you have like once you start making revenue. Now, on the revenue side, there is no exact definition of what is an early stage startup. Your revenue could be as small as $5,000. You like VCs think you're early stage. It could be as high as $200,000 every month. So 2.4 million, $3 million, you're still early stage. So it depends upon industry to industry. But my opinion is anything above $3-4 million. Once you start making that kind of revenue, you are no longer an early stage startup because then you have shown enough validation. There is some product market fit, and then what you are maybe what we call a mid stage startup. Any questions on this?
Guys, we can take questions.
So Sushant this side, sir.
Go ahead,
Hi,
Sushant.
Please go
Hi,
ahead.
sir. Hi, sir. Sir, it's a pleasure that you have been with us through Wadhwani Foundation, sir. We are really grateful to you. I'm also a startup. My name of my company is S.G Hospitality. Sir, if you could tell us in dollars, if you could tell us in INR, what is the minimum revenue one should generate to become a scalable product?
So Sushant, there is no correct answer when you say C. Most startups are scalable. At least that's the original idea. If you're building something that is not scalable, like it's most probably not a startup because startups are quickly growing companies.
Okay.
So revenue is not the right parameter to define scalability.
Okay, fine.
Because every scalable startup started somewhere. Started an idea or at a product when there was zero revenue.
Yes, sir.
But again, to answer your question, say, so $200,000 per month would be roughly 1.5 crore rupees.
1.5.
So if you can quickly grow to 1 crore monthly revenue, within 1 year or 2 years, that shows scalability. Now, if you take 10 years to reach that revenue, maybe you're not very scalable because you can't grow quickly. So scalability means quick growth. How quickly can you grow? If you can achieve 1 crore revenue within 2 years, I think you are scalable.
Okay, fine, sir. Thank you, sir.
But again, this is very subjective. It
Very
depends upon
subjective.
the industry.
And also relative, sir.
Right.
Yes, sir. Yes.
Amit, if you can just
We
go
can,
to,
yeah, sure.
or any other questions on this?
Any other question, anyone? Yes, AA, why don't you go ahead? Somebody by the name AA is raising
Can you hear
hand.
me?
Go
Yes.
ahead.
Yeah, so
you're saying that during the early stage, you should not go for funding. At the same time, if you have tie up with a very good consulting firm, which can leverage your services, so then at that point of time, can you go for funding? Like, you're a three party.
Mhm.
So
So,
if I do a tie up, it's right now in the progress. It's not still, we've not done the tie up. But if it happens, then already the talks are there to get work and all that. It's already started.
mhm.
So then should I, because this venture requires funding, so should I go for funding?
Yeah, of course. So there is no rule saying you should not go for funding at early stage. It's just that it's very difficult to raise capital in early stage before revenue. If someone believes in your idea or your product, please raise capital.
Revenue is coming.
See,
But
again, I'm
right,
telling you, when you say funding, I'm assuming you have an investor who's ready to fund it, right?
okay. Right now, I don't have a funding in the
No,
sense.
but if you can find an investor through anyone, through your own network or through someone else's network, if you can raise capital, please raise it because you need capital to build a startup. When
Yes.
you sometimes might hear people saying, don't raise capital at early stage. That's incorrect. It's just difficult. It's just that it's difficult to raise capital at an early stage. Not many people can raise capital.
So can you share some of the experiences, like, bad experience, good experience, and what we should take precautions and all that later?
So I can come to that, like maybe over the next, but is it particular to something specific?
Like, it's just that, there is a hitch, like, there is some reluctancy whether to go for it and how it is going to be. Like, right now we are all doing it on our own. Now some investor comes in. So what are the conditions going to be? So there is some at that point of time.
So I'll discuss a bit more terms and conditions a bit more later. But if you need capital, there is some investor to fund it, please take it. Otherwise, you can't build the product.
Thank
need
you.
money.
Thank you.
Thank you for that lovely question. I would request all the participants to pause for some time at least. Let this presentation get over because there could be a couple of pointers that where your questions would be around, and those can be then answered, and then we can take those questions. It would be good if you can jot down your questions, and we can do the Q&A. Hope that is okay, Pushkar, with you as well.
Yeah. So
right.
See, anything related to this slide, if you want to ask, that's fine. Because a lot of your questions I'll answer later. They'll be in the slide.
Sure.
I am Subhash. I have a question related to this slide. So I'm from Peduji Private Limited. Actually, I just want to ask, what are all those key matrices that we should measure in MVP test stage?
So,
I mean, just like, yeah, continue, please.
If there is no revenue, so
obviously,
if there could be two ways. If there is no revenue, the KPIs you should measure is number of customers. If you are an app, daily active user, monthly active user, how is that changing? Once you start making revenue, you should measure monthly revenue, growth in monthly revenue, and also your contribution margins. So contribution margin is revenue minus direct expense.
Okay, got it.
These are the metrics you should measure.
Okay, and minimum how many customer one should get for your MVP? If I mean, at the stage where he can say, okay, my MVP is now okay, it's tested and validated. So minimum customer quantity that need to be get for that.
So there is no right or wrong answer for a app. Say for a B2C startup, it could be thousands or 10,000s. For a B2B startup, if you make say $10,000 per month from one customer, 3-4 customers is also fine if people are willing to pay you so much capital. Eventually, it's about revenue. Once you acquire a lot of customers, you should also start making money.
Okay.
Pushkar, I had a question on pre-revenue valuation. Are you talking about that in the later slides?
Yes.
Okay.
There would be.
I'll park it. Thank you.
I think we should move to the next slide. Yeah. Pushkar.
So this is the question. So how do you value startups? So usually on a post-revenue stage, you take a revenue multiple. So say your annual revenue was $1 million. Now VCs usually assign you a multiple. That multiple can be as low as 3 if you're a D2C startup, as high as 10 if you're a SaaS startup. Why SaaS multiples are higher? Because SaaS gross margins are also higher. So SaaS companies make more profit than D2C companies. So valuation is multiple multiplied by annual revenue. How do you typically calculate revenue for startups is not last 12 months revenue or not financial year revenue, but current revenue multiplied by 12. So this is called ARR, annual recurring revenue or annualized revenue run rate. So say if your monthly revenue is $100,000, your ARR becomes 1.2 million. 100,000 multiplied by 12. And then you get a multiple on this. So this multiple could be as low as 3, as high as 10. Depends upon a lot of factors. How big is the market? How aggressively have you grown? What is your gross margin? But this multiple is only useful if you make some revenue. So should be at least $0.5 million every year. Less than that, say if you're only making $100,000 revenue. Now, even if a VC gives you 5x multiple, it's only $500,000. Or at $50,000, it's only $250,000. So that's not the correct way to value startup. So to answer your question, if you are at a pre-revenue stage, or if you are a minimal revenue, it's all about negotiations between VC and founder. It depends upon a lot of things. Most important is the founding team. How good is the team? How relevant is their background? Have they built something similar? Product, what product are you building? How big is the market? How big this company can become? And competition. Who else has built it? Why is your product better? But eventually VCs analyze. But the most important thing is again the founding team. And there is no range at the pre-revenue stage. So some founders get $3 million, some get $1 million as valuation. So it boils down to how much the VC likes you and how much they are interested in investing in you. Just one thing before I want to move ahead is a lot of time founders do these complicated DCF analysis, which is discounted cash flow. Now that's a complete waste of time at early stage. You might have some CA who will say, hey, pay me 20, 30,000 rupees. I'll give you a valuation certificate or valuation report. Don't fall for that, because no investor is going to invest money on these reports. They will see your product, see the team, try to speak to you, and then arrive at a valuation. Now, any questions on this, on valuation?
I have one question regarding the founder team. Okay. First of all, don't take it otherwise, because it may be sound otherwise thing. Okay. So,
Okay.
the question is that, see, actually, investors says there must be a good founding team. I mean, a founder market fit. Okay. Or those founder must have a good vertical heads in their team. Okay. Now, a startup says, okay, I would like to have all those things, but I don't have money for that to give them. So how to hire them? So there is actually, if you see, there is a debt pool, okay, or a debt cycle. Founder don't have money to hire them or to get those kind of people, and investor says, okay, if you don't have, don't come to us. So what to do in that?
I would request others to please go on mute. I'm also requesting the participants to be crisper in your questions, please. Do not take more than 10 seconds.
So we should go with the equity or not. If equity, then equity or ESOPs.
So early stage startup, no one expects you to have a founding team.
Okay.
The founder should have the right pedigree. Say if you're building a SaaS startup. Now, if you don't have a SaaS background, no VC is going to fund you because you don't have the right background. So build something you understand, something that you have done before. Because VCs back founders. They expect founders to build big companies for them. Now, if you have a background in marketing, you can't really build a SaaS product. You need a tech co-founder who understands SaaS business or fintech business. If you haven't worked in a bank or a financial institution, it's difficult to build a fintech business. So this is what I mean by team. When you're just building a product, you don't need a 10-member team. But the co-founders, if there are 2 co-founders or 3 co-founders, they should have the right experience.
Can you explain
That's
the
Hello.
margins again?
Sir.
So
Explain.
Riddhi Golia, you are next for the
Hello.
question. Please go ahead.
Sir.
Yes. Yeah. Can you please
Sir,
build
let me,
something
sir.
that you fix?
Hello. I'm
It has to be Riddhi Golia. Please ask your question.
Yeah, I just want
Hello,
multiples explained again.
Hello,
Can you hear me?
hello.
hello. This is Riddhi. Hello.
So first is I would request participants. I can understand your curiosity level, and we will have to follow some flow. I will be calling out names of people who have raised their hands, right? And let's follow that order.
Okay, sir.
Thank you so much. So Riddhi, your question,
Yes,
please.
sure. Yes, Pushkar. Hi. So basically, you were saying build something that you know from before. So in my case, I'm an architect. I'm building a tech platform for a job portal, but I don't have a tech background with me, or nor am I from IIM or IIT. So in that case, we have built our MVP and everything. So like, how should we proceed for the funding if we don't have any pedigree as of now?
So who has, if you don't understand tech, who has built your app?
I have built it. I mean, I'm a learner by heart, so yeah.
So see, if you don't have a tech background but you understand technology, you will have to convince investors that
Okay.
hey, I understand technology. I have built this app.
Mhm.
Now the investor won't know like how good you are at. That's why people look at IITs. Investors look at IIT or relevant background because that's a sign.
Right.
If someone went to IIT and studied computer science, most probably that person understands computer, understands coding better than say someone like you who has an entirely different background, right? So if you're doing something outside of your area of expertise, it's difficult to raise capital because then you have to convince the investor that you are the right person, and then the competition is intense. So if you're
Okay,
saying
so
you have just built the app, you will have to go out and speak to hundreds of investors and convince one to back you. There is no other way.
okay.
Hello.
So
Hello,
in
sir.
that case, if we hire a tech co-founder, will that be a
Hello.
better proposition for the investors?
Yes, any day. So if you can find a good tech co-founder, like
Hello,
that person will add a lot of value to your team.
Okay, okay. Thank you.
सर, मैं
Hello.
महेश हूँ, गुजरात से हूँ सर।
ओके, बोलिए।
और गुजरात से सर हूँ, मैं 25 साल से ज़्यादा मैंने रूरल डेवलपमेंट में काम किया है और अभी मैं एग्रीटेक में कन्वर्ट होना चाहता हूँ। मेरे पास 10,000 से ज़्यादा फार्मर्स का नेटवर्क है। हम ई प्रोक्योरमेंट से स्टार्ट करना चाहते हैं बिजनेस और 1 साल से हम कर ही रहे हैं एक मॉडल लेवल पे दैट सक्सेस। और तो सर हम कैसे हम प्री सीड में जाना चाहते हैं और हमारे पास बहुत अच्छी टीम है, रिच टीम है और 3 स्टेट में गुजरात, महाराष्ट्र और मध्य प्रदेश में। और मैंने खुद ने 50,000 महिलाओं को, फार्मिंग महिलाओं को हमने लोन भी दिया है। बहुत बड़ा नेटवर्क है हमारे पास। तो
आप लोन किसी ऐप के थ्रू दे रहे हो या
नहीं, अभी लोन के लिए नहीं करने। हम लोग प्रोक्योरमेंट में जाना चाहते हैं। एग्रीकल्चर प्रोडक्शन जो है, अभी फार्मर ऐसे कि बहुत सारे छोटे फार्मर का प्रॉब्लम ये कि उनका सेल जो करना है वो पूरा सेल नहीं होता है। सेकंड, उनके साथ कई बार फ्रॉड भी होता है। तो मैं एक सॉफ्टवेयर इस तरह से करना चाहता हूं ताकि वो ट्रांसपेरेंटली वो उनका सेल हो जाए। और दूसरा है कि वो सेल कहाँ हो तो कि भाई स्ट्रॉन्ग जो आजकल जो अपने क्या बोले सप्लाई चेन जो है, ऑर्गेनाइज सप्लाई चेन, उनके साथ जुड़ना चाहता हूँ, वो सॉफ्टवेयर से जुड़ना चाहता हूँ।
तो अगर आपको फॉर एग्जांपल सोर्सिंग समझ में आता है,
हाँ,
तो आपको एक टेक को फाउंडर ढूंढना पड़ेगा जो आपका सॉफ्टवेयर बनाए।
हाँ,
क्योंकि कोई और नहीं बना सकता है।
हाँ, वो तो
उसके बिना कोई फंडिंग करेगा नहीं।
हाँ, सही है। तो सर हमें इन्वेस्टर भी ऐसा है, भले छोटे लेवल पे आए कि जो भी हो, पर टेक ऐसे इन्वेस्टर आ जाएंगे कि जो खुद भी टेक में हो, AI में, तो इस तरह से हमें चाहिए सर। मैं इतना गारंटी हूँ कि सर मेरे पास मैंने 50,000 फार्मर्स के साथ
Mahesh ji, one question at a time, otherwise we'll end up.
This is my question over.
Yeah, thank you. Amit and Pushkar, let's take the questions later.
Yes, absolutely.
Hello.
Absolutely.
Yeah, hi,
Pushkar, you please continue. We'll take the
answer.
question after the session. Requesting everybody to park your question for after once we have finished with these slides. So one question that came up, Pushkar, was related to, there was a request that could you please explain the revenue multiples method again?
Mhm.
Yeah.
So very simply, you are a startup. Your monthly revenue is, let's say, 1 lakh rupees. Now, you started your startup last January, your revenue was 1 lakh. Slowly, it grew. Right now, April, it was 10 lakh rupees every month. So even though your revenue for the last year was maybe only 50 lakhs, because first month you did 1 lakh, then you did 2 lakhs, you slowly grew, then you did 4 lakh. Your current monthly revenue is 10 lakhs. So how do investors calculate your annual revenue? They multiply your current revenue, last month's revenue, by 12. So 10 lakhs multiplied by 12. Your annual revenue becomes 1.2 crore. It's called ARR, annual recurring revenue, that is for SaaS, and annualized revenue run rate, that is for other businesses. Current month revenue multiplied by 12. You get a multiple on that. So if some investor gives you a multiple of 4, your valuation becomes 4 times your revenue. So if your revenue is 1.2 crore, your valuation becomes 4.8 crore. Similarly, if you get a multiple of 8, your valuation becomes 8 multiplied by 1.2, 9.6 crores. Who determines this multiple? Market. So every industry has a set of multiple that keep changing depending upon demand and supply. So in good times, multiple rise, bad times, multiple come down. So this is particular for every industry. So usually you'll get that multiple. So if SaaS multiple varies between 6x to 10x, you can also get 6x or you can get 10x, depending upon your growth.
Pushkar, you can continue requesting others to please go on mute.
So maybe we can go to the next slide.
Thank you. Hope that answers everybody's question on revenue multiples. It was very clear.
So in early stages, what do investors look for? So as I said before, most important is founding team. By founding team, I mean founders, because early stage startups will maybe have 2 founders or 3 founders and at best 1 or 2 employees. You won't have a 20-member team. So investors back founders to create company. The only way to raise capital is to have relevant background. Otherwise, you'll struggle. Like someone asked, like she's an architect. Now, if you're an architect and if you're building a tech product, it's more, and that is not related to architecture at all, it's more difficult. You can raise capital, but you'll take more time. Secondly, is market size. Now, you might have heard of this term called TAM. It's called total addressable market, which is basically how big is the market size of your product. So VCs invest in products that have big market sizes. Why? Because they want companies to become big. Every startup that a VC or investor invests in should have at least the potential to become a really big company. There's a different matter that most startups don't become such big companies, but at least on paper, they should have the potential to become a really big company. That's why if you're building a very niche product, something that operates in a very small market, and that is also not growing quickly, you will struggle to raise capital. So either your existing market size should be big or your market should be growing quickly. Third thing most investors look at is competition. Are you doing something that is totally new, or there are existing startups doing something similar? Now you need to convince them, why are you better than your competitors? Having a competitor is not at all disadvantage, because any good idea will have multiple competitors. And usually competitors don't kill the company. Why startups fail is because they're not able to build products. They're not able to grow. So don't worry if you think like your idea already has 20 competitors. You can still create a great company. You might have heard of a company called Blue Smart. They offer EV vehicles on rent, similar to Uber and Ola. They recently raised a big round. Now Uber and Ola dominate car rental category in India, taxi rental, and still a new startup came up. Why? Because their product is better. So you have to convince investors that you are building a better product. Finally, investors also want to know about your unit economics. This becomes more relevant once you start making revenue. But unit economics means for every transaction, what is your gross margin? So say if you're selling a product for 10,000 rupees, how much does it cost to directly build that product? Is it 8,000, 6,000? How much are you spending on marketing? How much are you spending on sales? For pre-revenue startups, it's important to do some research and understand unit economics of your competitors. Like what are their gross margin? What is their net margin? Because investors would like you to educate them. As an investor, I can't know about all industries and everything, all the competitors. So I expect founders to explain that to us. There is some question, I think, for.
Do you want to take them now?
Or we can just take it later. That's also fine.
Yeah, that will be fine. Yeah.
So now, who are early stage investors in India? By early stage here, I mean people. I assume most of you want to raise less than 3-4 crore rupees. So anything under $1 million is early stage, or say $0.5 million, which is roughly 3.5 crores. So India, there are not many seed VCs. Seed VCs are early stage VCs who invest smaller checks. So maybe 1 crore, 2 crore, that kind of check sizes. So unfortunately, they don't have many such VCs. There are few micro VCs or seed VCs. For example, Better Capital is one that invests in SaaS. SOSB is another, which is a sector agnostic investor. But as you can realize, there is immense competition. These guys get hundreds of decks every day because everyone wants to raise capital, early stage capital. So the other option is you approach accelerators. So most of you are already part of Vadvani Foundation, which is a kind of accelerator. But then there are other accelerators like Y Combinator, Antler. Sequoia has an accelerator program. Axel has an accelerator program where they invest small capital in early stage startups. So this could be 1 crore, 2 crore, depending upon the firm, depending upon the VC. The third category is angel investors. So angel investors can be individuals. They can also be syndicates. So you might have heard of a term called syndicate. Syndicate is nothing but a group of investors. So maybe 10 people come together. Everyone puts in 5 lakh rupees. And then the syndicate collectively puts 50 lakhs in a startup. So most of these syndicates operate on platforms like AngelList, Let's Venture. So if you want to raise capital from angel investors, these platforms are the best way. You should approach AngelList or Let's Venture. There are other platforms like that where you can approach them. You can find the right syndicate and then they can invest in you. Finally, there is crowdfunding, which is slightly new in India. It is an untested market. It can have regulatory challenges because right now the law is not very clear, but that is also something worth exploring. So there are companies like OneCrowd. You might have heard of a company called Tyke who invest in early stage startups. So they are worth checking. But the easiest way is angel investors and accelerators to raise early stage capital. Now, how do you raise cap? Maybe next slide, Amit. Sorry, you can just go back. I think is there just go back. Okay, just come down. I think there's some problem in this slide, but I'll just take it. So how do you raise capital? Not this. Yeah, so how do you raise capital at early stages? I think I just copied the last slide, but most important is preparation. You have to understand market and your competition, unit economics of your competitors. Why are you building this product? Why does the market need it? If you're trying to solve a problem, you should do a lot of research and understand what are the current solutions in the market. Why are those solutions bad? What is broken? Because Users will only use your product if your product is better and if the current solution in the market doesn't solve the need. So you have to do a lot of research. You have to do a lot of preparation before you reach out to the first investor. You should know how big is your market, who are your competitors, what are their revenue, what is their unit economics, what is your product, what are the features of products of your competitors, what features are they missing, if you're adding some additional feature, why are you adding that feature, what is your product roadmap, what is the thing you'll do first, after that what will you do, how will you acquire customers, what is your customer acquisition strategy, what is your revenue model, will people, if you say, all right, I'm building a SaaS product and I'll charge 20,000 rupees per month from any client, any customer, will the customer pay you 20,000 rupees? What are they paying to your competitors? If you're building a D2C brand, say in cosmetics, now there are hundreds of cosmetic D2C brand. So what are you doing it different? Are you using Ayurveda or using alternative medicine? Why are you different? How will you stand out? How will you market? What will be your go-to marketing strategy? So this is something you need to spend a lot of time before you approach any investor. Because once you talk to an investor, like usually it's difficult speaking to an investor. You approach 10 guys and maybe one guy gives you time. Now, better make that time count. If you're not prepared and if you just go, and if the investor thinks like, hey, you're not the right person, or he's not impressed, like he won't speak to you again. So just prepare before you approach any investor. Maybe next slide, Amit. So how to prepare a good pitch deck? So a pitch deck, like it's just about following a checklist. It should have maybe 10 to 15 slides, maximum 10, maximum 15, minimum 10. The things you should discuss in your pitch deck is your team. What is your background? What is your story? Now, as an early stage founder, you should also be a good storyteller. You should tell investor that, all right, I am building this product and how this product will change the industry. Why the current products are not so good. And you should be able to convince the investors in the form of a story, because people are always impressed more by story than bare numbers. So practice your pitch, practice your storytelling skill, prepare a compelling story that, hey, this is something that can maybe transform the industry, whatever product you're building. Then the pitch deck should have, like I discussed, your total addressable market, how it has grown in the past, what will it grow in the future, how much can it grow, what are the current solution, what are your competitors building, what is your solution, why is that better. Then you should also talk about results, that at what stage you are right now. Have you launched the product? Are you at an idea stage? If you're at an idea stage, what research have you done? If you have launched the product, when did you launch it? How many customers have you acquired? How did you acquire those customers? How often are they using it? What is your product roadmap? If you're building a B2B business, have you acquired any big client or a small client? Who are they? If you're already making revenue, then how has your revenue grown? What is your unit economics month on month? How have your margins changed? And finally, ask, like, how much capital do you need? So a lot of founders say, I need 4 crores or 2 crores. You should also explain in the deck that how you're going to use that capital. So are you going to use everything for marketing? How much are you going to use for salaries, for tech development, infra, sales? And then projections, that right now you are at this stage. In 2 years, what stage you'll achieve? One advice, just don't go overboard in projection. Because like I see a lot of pitch decks and founders are just projecting 100 crore revenue in 2 years. Well, that's not possible. If you're at zero revenue right now, you just can't, like in 99% cases, you can't achieve 100 crore revenue. So even though projections are an exercise on Excel, you should be optimistic, but also some realistic. See how big your competitors are. If none of your competitors have a revenue of 100 crores and they have been around for 5 years, You can't do 100 crores in 2 years. That's not realistic. So I have given a pitch document to Amit. He can just circulate it later. It will give you description on like what should be on every slide. So we created it for a client. And if you visit our website, you'll find a lot of blogs on how to raise capital for early stage startups. What are the things they should look at? How to create pitch deck. Next slide, Amit.
Sure.
Now this is the final slide. I'm done. We can just take questions we have. So there are 3-4 things you should understand. One is dilution. So whenever you raise capital, the startup issues new shares. So as a founder, say there are 2 founders and both of you own 5,000 shares each in the company. So you own 50% each. Now, when you raise capital, you don't sell your share. Founders don't sell their shares. The company issues new shares because then the money comes into the company. It doesn't go to the founder. So as a result, say if both of you own 5,000 shares each and you own 50%, now you decide to issue 2,500 new shares. So now total number of shares become 12,500. You still own 5,000 shares. You haven't sold your share. Your shares haven't come down, but your percentage comes down. So instead of now owning 5,000 shares in out of a total of 10,000, you own 5,000 in 12,500 shares. So each founder owns 40%. The new investor owns 20% because investor gets 2,500 shares. The money that investor gives you goes into the company. You use that money to grow the business. Usual rule is you dilute around 10 to 15% in seed round. So if you want to raise a crore, your pre-money valuation will be around 5-6 crore. This is the rough standard. Some founders also dilute 20%. My advice is try to not dilute more than 20%. If you're not getting a lot of capital, raise lower amount, but also keep dilution low because you'll need to dilute more as the company gets bigger. So try to build a good product in less money possible if you're not able to raise capital. Second term you might hear is cap table. Cap table is nothing. It's a list of shareholders and their stake. So your initial cap table was founder 1 owned 50%, founder 2 owned 50%. Once you raise capital from investor, the cap table becomes founder 1 owns 40%, founder 2 also owns 40%, investor owns 20%. So this is how cap table changes after each round. You might also hear terms called priced and unpriced round. In a priced round, you decide a valuation. When you say, all right, I want to raise money at 5 crore valuation or 10 crore valuation. Investor agrees, you issue so many shares. But typically, it's very difficult to determine a valuation at an early stage when there is no revenue, no customer validation. So most startups do an unpriced round. Unpriced round means you link the valuation to the future round. So you tell investor, all right.
What is unpriced here?
Sorry?
What is unpriced here?
Unpriced, you're not pricing the round. You're not putting a valuation as of now. You're saying the valuation will be linked to the future valuation. So I'll give you an example. One way is you do a price round. You say, I raise 1 crore at a 5 crore valuation. Second is unpriced round. When you say, I raise 1 crore, but I don't know what is the correct valuation right now. Because I don't know, there's no revenue, there is no customer, there is no validation. So both founder and investor agree that, all right, maybe in 12 months or 18 months, you'll raise a larger round when you have more customers, when you have more revenue. And then you will price the round. So you'll agree on a valuation. So the current investor will say, all right, give me 20% discount on that round. Since I am putting in money right now, your valuation will become 15 crores in 18 months. So once you get money at 15 crore valuation, my 1 crore capital will get converted at 12 crore or 13 crore at a lower price because I came early. So
How
this
does
is,
this help?
sorry?
Help? I'm not able to understand how does it add value to whatever you're doing with a priced and an unpriced round.
Because at an early stage, say if you go to an investor, how will you value your company if there is no revenue?
Sir,
Pushkar, it would help if you can take an example and explain probably.
Sorry?
You can take in some example of some, hypothetical
Pushkar,
numbers and
take two
explain.
companies. One company is perhaps at an MVP stage and also
A
raised
valued
revenue.
company and an unvalued company, and how.
So let's say there are two companies, both are at MVP stage. There is no revenue. Now company one goes to investor and say, I want to raise 1 crore at a 4 crore valuation. So this 4 crore is, it's called pre-money valuation. It is the valuation of the startup at this point of time. Founders own 4 crore, investor puts in 1 crore. The valuation becomes 5 crores. 4 plus 1. 4 was the previous valuation. Investor put in 1 crore. The new valuation becomes 5 crore. Founders own 80% of the company, investor owns 20%. This is an example of a price round. In an unpriced round, founders and investors can't agree at a number. Investor says, I don't know whether you're valued at 4 crores or 2 or 7. Founders also agree that it is too early to put a number as of now, a valuation number. So both say, all right, we'll do an unpriced round. Unpriced round means you raise capital, you say, all right, I'll link this valuation to the future multiple, future valuation. So you take 1 crore right now, you build some product, you start making revenue. After 12 months, you raise capital at say 10 crore rupees. So 10 crore becomes the future valuation once you have revenue after 1 year. So the existing investor, the investor who came on day zero, who put in 1 crore rupees, says, all right, just give me some discount to whatever is your future valuation. Since I am taking more risk, I am coming right now. So if your future valuation after 1 year is 10 crores, whenever you raise that money, this could be 10 crore, this could be 12, this could be 8. I get some discount. I get a 20% discount. So in the second case, if you raise capital after 12 months at 10 crore valuation, your existing investor gets 8 crore valuation because there's a 20% discount. I can share an article with every one of you. It's very difficult to explain it without numbers. So I can share something that will clarify this doubt. But this is something you should be aware of.
Let's say if I go to an investor and he likes my idea, and उसके बाद मतलब कि same condition है, there is no revenue and अभी validation भी थोड़ा बहुत ही हुआ है, and but he likes the idea, he believes in idea, and if I say कि हम एक unpriced valuation रख सकते हैं, तो मतलब do investor consider this if they believes in idea?
So early stage में सबसे common है unpriced round. Because उस समय बहुत मुश्किल होता है determine कर पाना कि अभी क्या valuation है. So most angel investors understand this. कि अभी हम एक valuation fix नहीं कर रहे हैं, पहला round है, कोई revenue नहीं है, तो अभी के valuation हम future से link कर देंगे. Future में जो valuation होगा, उससे थोड़ा सा कम कर देंगे. तो ये common practice है. आप किसी भी investor के पास जाओगे और अगर valuation discussion होता है, तो अगर वो investor थोड़ा prolific investor है, उसने 2-3 invest कर रखा है startup में, he will understand it.
Thank you.
But you can talk about instruments at this point.
So one final thing. So how do you raise capital? So most common way to raise capital in India is CCPS, which is a kind of share that gets converted in the future. So दो तरीका होता है raise करने का. Either you give share right now. You say, all right, I'll give you 1,000 equity shares. These are called common shares, but no investor takes that. All investors take preference shares, which is CCPS. So eventually, once the investor wants to sell those shares or the company comes for an IPO, those shares get converted to common share. ये बहुत ही simple है. You should just be aware about it. This is just think of CCPS as regular shares. The second thing you should know is CCD, which is a kind of debt used in unpriced round. So you raised 1 crore without setting up the valuation. So since there is no valuation, you don't know how many shares the investor will get. Will investor get 100 shares? Will he get 200 shares, 150 shares? So the company issues 1 crore worth of CCD, which is a kind of debt with zero interest, whenever you raise the next round, this CCD will get converted to number of shares, depending upon what is the valuation then. So there are two ways, CCPS or CCD. CN is called convertible note, and SAFE is a kind of CCD. So both CN and SAFE are kind of CCD used in unpriced round, where as of now, you're raising 1 crore, but you don't know what is the value of the company. So you don't know how many shares to give to investors. Will it be 1,000? Will it be 500? Will it be 200? So you just take money in the form of a debt, which has 0% interest. Once you do a price round, that money, that debt gets converted into equity and the investor gets shares.
In that case, suppose अगर कोई ऐसा स्टार्टअप है जिन्होंने पैसा लिया, ठीक है, डेप्थ के फॉर्म में, बट किसी कारण से इन फ्यूचर सपोज वो नेक्स्ट राउंड नहीं ले पाया किसी वजह से, तो ये जो डेप्थ था ये क्या फाउंडर्स को वापस करना पड़ेगा या फिर क्या होगा नॉर्मली?
तो इन केस जो भी आप अनप्राइस राउंड करते हो, so there is a timeline for it. Usually it says, all right, I'll raise my next round at say in 12 months or in 15 months. In case you're not able to raise that round in 15 months, then the investor will say, then you'll have to convert this debt at a pre-agreed valuation. This valuation is usually quite low. So this is a kind of valuation usually you won't agree at the start. So investor will say, all right, if you can't raise a big round in 15 months, my 1 crore will get converted at a 4 crore valuation or 3 crore valuation. So this is mentioned in the shareholders agreement in the term sheet. So you don't have to return this debt, but in case you're not able to raise future capital and the company survives, this gets converted into regular shares.
नहीं, regular share में तो convert हो गया, ठीक है.
I want to ask.
So I would request
one at a time, please. One at a time. Amit will take up the question. Others, please raise hand. Nobody will, otherwise will not be able to
complete it. Yeah. And you can you can send your questions to me alongside, and hopefully, I will definitely reach out to Pushkar and come back with your responses. Guys, it looks like you're not listening to me. Please allow me to complete and allow me to host. Thank you so much. You all have been very patient. Thank you, Pushkar. So I'll take questions now one by one from people who have already raised this. Right, we'll start with Selvam. In case your question has already been answered, it would be good. You can just say it's answered and we'll move to the next participant. Okay, fine. We'll move on to Shivanshu Dwivedi. You can unmute and ask your question, please.
Thank you. So first of all, thank you, Pushkar, for giving us a deep insightful related to funding aspect.
Question,
so
please.
So I had two questions first. Right now, as an early technology-based startup, investors approach me, but I don't figure out, they wanted financial sheet of my company, but I am not able to prepare this for this stage. So whom I contact him for preparing? And the second question is, I am developing like a technology-based some product. So what is the time to go with the investor and discuss about perspective? Because I am developing like 50 lakh cost will be a product development. So should I add my people's salary and employees cost in it, then tell like a 15-month burning cost, that's why. So I had two questions only.
First question, there are a lot of free templates on the internet. You can just download it or just create a financial model of your startup. Or you can ask a friend who understands finance. If you don't know anyone, I say approach a consultant. There'll be dozens of consultants who can create that for you for some money. Second, you should raise whatever capital you need to launch the MVP. If you're a tech co-founder, if you understand coding, my advice is build the product and then go to the investor. It's much more difficult to raise money to build the product. But once you have built the product, then it's slightly easier to raise capital. But if you need 50 lakhs to build the product, I'm assuming these 50 lakhs will be for salaries. So then you have to ask investor for 50 lakhs. But try to do the early stage work by yourself, by not hiring people. Co-founders should build the MVP, not employees.
Thank you. Pratibha, you can go next.
Thank you, Amit. Pushkar, I would like to know what are the typical coupon rates in a CCD?
Can you say a bit louder? I can't hear you.
What are the typical coupon rates in a CCD?
So there is zero coupon in a CCD. There is no interest.
Oh.
0.0001%.
So maybe you can take 10 seconds, Pushkar, to explain what is coupon rate for the large,
Coupon rate is
understanding the
interest
larger
rate.
audience.
So whenever you take debt from someone, you have to pay annual interest or a monthly interest. So you take 1 crore loan, you have to pay 10% every year. That is called coupon in a bond. In a CCD, even though technically it's a debt, there is no coupon. Investors don't expect you to pay interest because this is just an instrument. Eventually, it will get converted to equity. So you don't have to pay any interest.
Thank you. So Deshna, you can go next.
Hello, Pushkar. I just had a question. In terms of raising funds, so I have a business which already has revenue coming in. We are doing a pivot and the revenue channels and the business model will change. So in terms of approaching the valuation, what approach should we take? Should we consider the historical financial data or should it be a fresh approach to the finances?
But is this a big pivot? You're doing something totally different?
We were a service company. We are transforming into a product platform.
Okay. So some investor can give you a multiple of service revenue, but that usually won't happen. That's not relevant. So my advice is do the pivot and make some product revenue and then go to the investor. Because what you're saying is I have a service business. Now I want to build a product and the product will have some revenue. So at least show some revenue.
Sir.
Makes sense. Thank you.
Gopika, you can go next.
Sir. Hello.
Okay, fine. Piyush, you go next. Gopika, then after that.
Am I going next or who's going next? I would like to give my thanks to Mr. Pushkar Singh. आपने बहुत अच्छे से समझाया हमें और उसमें से कुछ क्वेश्चंस निकल कर आए हैं मेरे एंड पे। तो एक तो टीम बिल्ड जो है आपकी फाउंडर टीम के रिगार्डिंग है एंड फंडिंग के रिगार्डिंग। एक्चुअली हमने स्टार्टअप किया है, अब वो एक स्टेज पे आके स्टैग्नेंट हो गया, हमें फंडिंग की रिक्वायरमेंट है, तो अभी हमारा ऐप प्रॉपर वर्क नहीं कर पा रहा है, हमने ऐप आउटसोर्स किया है। तो अभी हमारा जो एक्सपीरियंस है एज अ टीम, हम सेल्स के पर्सन रहे हैं शुरुआत से ही। तो सेल्स में हमने किया, हमने जो ऐप स्टार्ट किया था सलून बुकिंग प्लेटफॉर्म हम लेकर आए हैं और उसको आगे उसके बिजनेस मॉडल को हमने बहुत रीडिज़ाइन करने की कोशिश करी। तो अभी हम एक जगह स्टक हो गए, हमारा फंड शॉर्ट पड़ गया है। तो आगे हमें क्या करना चाहिए फंड रेज के लिए? शुड वी गो फॉर द इन्वेस्टर्स? और सेकंड जो हमारा टीम है, हम वी आर 2 पीपल इन आवर स्टार्टअप। तो हम सेल्स के हैं, तो हमें कोई टेक नॉलेज नहीं है, बट ऐप को कैसे अच्छा करना है, क्या उसमें फीचर्स हैं, वो सारा हमने अपने स्टार्टअप के लिए है। तो आई वुड लाइक टू जस्ट सजेस्ट एनीथिंग फॉर दैट।
Sorry, I think I lost you in between. What I heard was, अगर आप मान लो कोई टेक प्रोडक्ट बना रहे हो ना, आप ऐप डेवलपमेंट आउटसोर्स नहीं कर सकते हो। आपको एक टेक को फाउंडर चाहिए, वरना बहुत मुश्किल है पैसा रेज करना।
It's quite typical to in early stage how to find a tech co-founder because हमारे connects जो हैं वो sales के रहे हैं, but अब हम जैसे co-founder labs।
आपके पास कोई आइडिया आएगा तो आपने कुछ सोचा होगा ना, ऐसे ही ऑल ऑफ अ सडन तो आप नहीं बोलोगे ना कि मैं ये बनाऊंगा। सो अगर आप किसी इन्वेस्टर के पास जाओ, आप बोलो मैं टेक कंपनी हूँ, मैं ऐप बना रहा हूँ और मेरी टीम में टेक को फाउंडर ही नहीं है, मैंने जो सबसे बेसिक चीज़ है वही आउटसोर्स कर दिया है, तो आपको बहुत दिक्कत आएगी रेज करने में कैपिटल। आपको टेक को फाउंडर चाहिए जो आप बना सकता हो, जो आपके विजन में बिलीव करता हो। आप ट्राई कर सकते हो, लेकिन आप देखोगे जितने भी स्टार्टअप्स हैं जो रेज करते हैं पैसा, स्पेशली टेक स्टार्टअप, टेक को फाउंडर होना ही चाहिए, बिना टेक को फाउंडर की कंपनी नहीं बन सकती।
Thank you, Pushkar. Gopika, you can go next. Please go next, Gopika.
Hi, Pushkar. So I had a very sort of similar kind of question, but I just wanted to answer if you can based on my platform. So my platform is basically a platform for kids where they can read safe news, safe and simplified news for kids, which is also by kids. Now we're not monetized. So I come back to the valuation question. There are two things. One is
how do I value something like this? How, like if somebody asks me, what is the valuation? So how do I arrive at that valuation? And number two, should I wait to have an app? We don't have an app yet. I do have somebody who wants to come on board as a tech lead, but I don't have an app yet. Ideally, should I wait to have that app before I go to an investor? Or do you think if the platform is good enough, I can go to somebody and then, say that the app is something that will be coming soon?
So can you do business only on platform without the app? Is it possible?
Yes, because it's a platform for kids where they read simple news. It's a safe space. So
So what is platform for you? Is it an online platform or an offline platform? I didn't understand.
It's a website. It's a website.
Website, right? So you don't need an app. If we can do transactions on website, that's totally fine. Regarding valuation, again, it will be a lot about negotiation. How good is the team? I can just give you a ballpark number. So usually in early stage startups where there is no traction, most valuations are around $1 to $2 million in that range. So this is what investors are comfortable putting in at. So say if you raise 2 crore, typical dilution will be around 10-15%. So this is something you should keep in mind. Just do the reverse math.
And as you said,
sorry, you were saying something.
No, you can complete.
So I was just saying, so if you're raising only 50 lakhs, you can have a smaller valuation, lower valuation, or lower dilution. That's also fine. But most early stage investors understand that 5 to 10 crores is the broad range. It doesn't make to raise capital at a low valuation. Like there's no point raising capital at 1 crore or 2 crore valuation. No one does that. So this is just the industry side.
Okay.
Thank you, Pushkar. We'll go to
Amit. I'll just check with Pushkar. Pushkar, you have time to take more questions?
Yeah, I can do 10 more.
I have requested him, yeah.
Up to 6:10.
Up to 6:10.
So 8 more minutes.
Mahesh, you can go next. Be quick, please. Okay, fine. Nitin Sharma, please go ahead. Nitin Sharma.
Hello, sir. Mahesh. Hello. Hello. हेलो सर
सर सुनाई दे रहा, आप बोलिए, आप सवाल पूछिए।
हाँ, अगर मेरे पास एमवीपी तैयार है, फील्ड में टीम भी तैयार है, सब कुछ है, अगर मुझे एग्री टेक में कन्वर्ट करना हो तो क्या टेक फाउंडर को कितनी इक्विटी देनी चाहिए, शेयरिंग कितना करना चाहिए?
सो टिपिकली रूल ऑफ थंब इज कि अगर 3 फाउंडर होते हैं, तीनों इक्वली इक्विटी रखते हैं, सो 33% ईच। अगर आपका ऑलरेडी एमवीपी बन गया है, अब आपको टेक फाउंडर चाहिए थोड़ा और उसको डेवलप करने के लिए।
अगर वो इन्वेस्टर सर मिल जाए तो दोनों हो जाए, अगर एज ए इन्वेस्टर टेक फाउंडर आ जाए तो मेरे लिए और भी।
सर कोई इन्वेस्टर टेक फाउंडर नहीं होता है।
अच्छा,
आइदर इन्वेस्टर होता है या फाउंडर होता है मोस्ट केसेस में। तो अगर आप कोई फाउंडर ला रहे हो, सो डिपेंड करता है किस लेवल का फाउंडर है। 10-20% शुड बी फाइन।
तो आप हेल्प कर सकते हैं मुझे इसमें
टेक फाउंडर ढूंढने में?
हाँ
नहीं सर, मेरा नेटवर्क नहीं है।
Pushkar, at this point, I want to ask you one question. How should be the equity distribution? Because that is one question, and the follow-up would be, what is a clean cap table, look like? In case you want, you can throw some light.
Equity distribution usually, yeah, it's very simple. 3 founder hai, they have known each other for a long time. They start a company. They take 33% each. Then the dilution comes. Whenever they raise capital, there is dilution. Usually बहुत बार होता है कि there is a solo founder who started a company. He has.
How about 70, 20, and 10? Will this work?
This can work again, but then the person who owns 10% will have very little accountability, will have very little incentive to grow the company. So why is that person owns only 10%? The other, say if the other guy has put in capital, that is fine. The one thing you should always avoid is people just think the ideas are super valuable, that the ideas are worth $1 billion. No one cares about your idea. People care about you. Can you build a product? So if you're not a techie, if you're getting a good tech co-founder who's willing to take a call on you, and if he wants 40% equity, give it.
And what about solo founders? I'm only a single founder.
So then you own 100%.
And then will I get investment? Is there a chance, or I should look for a co-founder?
More difficult, of course. Solo founders also raise capital.
Thank you. We can move to Nitin Sharma. Nitin, you'll have to unmute in case you're speaking. everyone has got questions. Pushkar, you would be expected to be here again.
We can take Yash.
So can I ask?
Yash, go ahead. Yash, go ahead.
Hello, sir. I'm audible.
Yeah.
Sir, basically, I want to ask something that अभी मेरा जैसे कि पुराना बिजनेस चल रहा है, ओके, तो उसको मैं और एक्सपेंड करना चाहता हूँ। वो प्रोप्राइटरशिप पे चल रहा है और उसमें हमारा मार्केट कनेक्शन काफी अच्छा है और हमारे पास ऐसे बहुत अच्छे अच्छे कस्टमर्स भी हैं जो हमसे जैसे कि माल जो होता है वो डिमांड कर रहे हैं, बट हमारे पास उतना कैपिटल नहीं हो पा रहा है कि हम उन्हें प्रोवाइड करा पाए, जिसमें हम लोग का B2B सप्लाई चेन टाइप है।
आप जल्दी पूछिए यश अपना सवाल।
तो सर इसी से रिलेटेड मुझे पूछना था, तो मुझे क्या करना चाहिए? जैसे कि अभी प्रीवियस ईयर मेरा 10 CR का टर्नओवर था, अभी डिमांड मेरा लगभग 10 CR का ही है, जिसको मैं 1000 CR नेक्स्ट ईयर में मैं ले जाऊंगा टर्नओवर के रूप में।
So sole proprietorship, the ask is 10 crore, the company is doing well. Pushkar.
बट प्राइवेट लिमिटेड पे रजिस्टर्ड है हम लोग, और जो सोल प्रोप्राइटरशिप पे था तो उनको भी हमने फाउंडिंग टीम में ला दिया है और हमारे पास को फाउंडर टेक बंदा भी है।
तो आप प्रोप्राइटरशिप में कैपिटल रेज नहीं कर सकते हो, आपको प्राइवेट लिमिटेड कंपनी चाहिए होगी।
यस यस, प्राइवेट लिमिटेड पे करने है।
उस पे आपको रेज करना पड़ेगा। यार देखो, ये कोई भी बिजनेस होगा ना, अगर कैपिटल मिलेगा तो ग्रो कर ही जाता है। आपको देखना है आप कितना रेज कर सकते हो। अगर आप ऑलरेडी 10 करोड़ कर रहे हो, आप किसी इन्वेस्टर के पास जाओ, अगर वो बोलता है कि मैं 2 करोड़ ही डाल सकता हूँ अभी स्टेज में, तो आप देखो आप 2 करोड़ से कितना ग्रो कर सकते हो। There is no point saying if I have 100 crores I can take this business to 1000 crore. वो ऑब्वियस है, वो हर कोई कर सकता है। तो आपको रियलाइज करना है कि आपकी स्ट्रेंथ क्या है, आपकी टीम पे आप कितना पैसा रेज कर सकते हो। अर्ली स्टेज में 1-2 करोड़ नॉर्मल है, तो 1-2 करोड़ रेज करो और आप देखो कि उस 2 करोड़ से आप कितना बढ़ा सकते हो बिजनेस। एक बार रेवेन्यू 10 से 25-30 हो जाएगा, फिर अगला राउंड रेज करना।
I will take last 2 questions because we are running short of time. I'll give it to Aparna.
Hello, everyone. My question is that I would like to know a little bit about grant money that's available for a social enterprise model, and how might one get that? Even through accelerators, there's again equity for even government grants. So can you give some light on the grant money which we all hear about, but what would be the right places to raise them, etc.?
So I don't know. Yeah, this is something I don't understand. But there are a lot of NGOs, lot of bodies. That's, for example, Bill and Melinda Gates Foundation is one big foundation that invests in startup. Just go on their website and apply. You'll have to do some research. I don't know which bodies are operational in India right now.
We can help you. Aparna,
yeah, of course.
Yes.
We'll help you.
Ankit would know it 100x better than me.
Does Bill and Melinda Gates Foundation have a enterprise fund?
Next question goes to Sarthak Sharma. Sarthak,
yeah, so my
question
question is, so I have started an edtech company. I have a tech co-founder, and previously I have approached to various early stage startups or accelerators that you name. Should I approach them again when I have tested one with 150 users? So do you think it's enough to approach them?
Has something changed since last time? Last time when you approached them and this time, has something changed?
Yeah, we have got 100 plus users on board and have tested our MVP with around 250 plus students.
And what was the stage last time when you approached them?
It was 0.
Yeah, then you should approach them.
Right, but we have 0 revenue till now. There is no revenue.
Which is fine. Which is fine. If you have some users are using your product, some accelerators will be interested.
Cool. All right. Thanks.
Thank you, Pushkar. That was really a lovely session. Ankit, would you like to?
Thank you very much, sir. Thank you. Sir, Pushkar ji ka contact number.
Yes, sir.
How to contact
So
Pushkar?
you can all reach out to Pushkar on LinkedIn. He is pretty much available. Very. I also approached Pushkar on LinkedIn. Just sent an email, message on LinkedIn, and he replied. Very accessible and very great blogs, very great write-ups that he write every day, and I think it comes usually at the very same time every day, which is around 11 o'clock. So you can follow him on LinkedIn and get more details on each of these slides that he talked about. And thank you so much, Pushkar, for joining in and giving us your valuable time and insights. We have taken more time from what we had promised, but there are still a lot of questions unanswered, and we might come back to you for another hour or session with you. Once again, many thanks. And
thank you, sir. Vadwani,
last request.
Thank you.
Request everybody to please go on mute.
Please.
Yes, thank you.
Thank you, Ankit ji.
Last request to everyone, you can lower your hands and then you can switch on your cameras. We'll take a quick group picture. You can post it on LinkedIn and you can tag Pushkar and Vadwani Foundation, and from there we can take it forward. Pushkar, we can't. Okay, thank you.
Request to lower your hands so that we can get a very clean grid.
Keep smiling. Someone is clicking. Okay, great. Thank you so much. Thank you everyone for joining. Thank you, Pushkar, once again. And we will reach out to you once again.
Thank you, Pushkar. Thank you. That was really wonderful.
Thank you.
Thank you, everyone.
Thank you.
Thank you.
Thank you very much, Pushkar. Thank you very much. Okay.
Thank you very much.